Hi, good evening, everybody, and happy to see it's still a lot of crowd out here for this session. So I'll like to introduce first panelist with us, which is Sridhar Gadhi from Quantella on the stage. He has been in the startup space investing from a long period of time, and happy to hear his views on that. Next, I like to call Rohit from Darwin Box. Again, somebody which is known in the circles and definitely looking forward for their views. Next, I'll call Aditya on the stage from VC Mint. It's a family office based out of Hyderabad looking at investing into the startup space completely. And last, I'll call Monish from MyCap Investments. Again, traditional family office across generations coming into space. So I think we'll start the discussion and happy to hear everybody's view there. So guys, I think we'll start the session. First, a very warm welcome to everybody here, and especially to the panelists for taking some time out in this on the Saturday. So coming to setting the context on the topic family office, startups, capital and beyond, let me break it into a very simple term and make the context clear. What is capital and beyond and family office and startups? Startups needs no introduction. I think this word is pretty much well known across. Family offices, many know, but I'll quickly take a few seconds to give you a description of it. Any family which is coming into liquidity or has liquidity and sets up a professional team to manage its investments across asset classes, be it equity, debt, startups, IPO, pre-IPO, real estate, so on and so forth. Once that team is set up, that structure is called family office. So predominantly investment, professionally managed team set up specifically for the purpose of family. I think with that definition, let me also set the context of what has family offices to do with startups. Obviously, we have heard about a lot of venture capital funds, startup funds, when we talk about startups. So what is this context? So traditionally, family offices have been the custodians of the assets of the family. They have known to tread with caution because their goal has been to preserve the family offices. But 10 years back, the narratives changed globally and India caught up to it. And now the family offices are getting into the startup space, investing with commitment and with capital. And that is where we have this tremendous panelist. I'll quickly have one more round, and it's a very unique shades of panelists we have. I'll start with Monish on the other side. So Monish basically comes from a generational family office space, which is a second generation entrepreneur looking into setting up the processes and families. Very interesting to have his perspective. Aditya, somebody who has built up businesses, sold off businesses, run the startup cycle completely, and now is completely helping through VC Mint in Hyderabad, setting up the ecosystems of family office startups in Hyderabad. We have Rohit. Rohit is somebody who is involved into businesses, yet keenly taking time out to invest and kind of mentor in the startup space. And that is a unique perspective we get from him, somebody who's doing business and also helping startups. And we have Sridhar, who has been investing from a very long time, almost a decade plus. Again, managing his own business. He brings a very unique flavor of doing strategic investments and also startup investments. So I think we will have a very good round of discussion covering various shades, facets of family offices and the investments. So I'll start with the first question. I'll keep it open for all, and I would like to start in whatever, preferably a chronological order from there. How are you seeing, each one of you seeing the relationship between startup and family offices in terms of quality, deal size? How are you seeing the relationship changing over a period of time? Coming with the perspective that Sridhar is from 10 years investing, Aditya from 10 years investing, Rohit almost from 7 years, and Monish almost from 5 years. How are you seeing this changes and the new relationship?
So firstly, thank you so much. Really honored to be a part of this panel. When I first started the idea of creating this family office, I realized that 95% of our net worth is stuck in our core family business, and the idea was to start diversifying. And I believe that startups, though the risk is higher, the rewards, if you hit a jackpot, could be absolutely massive. I think the most important thing here is also definitely the number of family offices in India are also growing right now. They've grown 5x or 6x in the last 7-8 years. And as long as you have a right allocation of risk capital within these startups, I think they could really, really boost the entire AUM of the family office.
Thank you for having me on the panel, guys. So for us, I built businesses over the last 15 years, and 2 years ago, we sold our business to private equity. And as Prashant mentioned, that is when it was an event of liquidity for us. Basically, we got a large pool of capital. And the first thing that a lot of people in the family said, and I'm not talking in the context of family office, but just everybody around, said that you need to be very careful how you invest this money, right? Which meant that the whole pool of capital started to look very defensive and very timid. Oh, I need to find a way to preserve this capital, right? I need to be able to hand it to the next generation. But then I went back to look at my journey and I said, okay, I've been a startup entrepreneur all along, and there is a certain kind of vibrancy to early stage capital. So in some ways, we looked at our entire pool of capital and said, we are going to be allocating a certain portion of capital, in our case 10 or 15%, towards early stage companies. And the mindset that we will have on the 85% of the capital and the mindset that we will have on the 15% of the capital will be very different. Right? On the 15% of the capital, we will act like an early stage fund, very similar to how a VC fund would act. And on the 85% of the capital, we will act like how a family office needs to act. Right? So we've been able to build teams that have these differential mindsets. And as a result of that, we invest 100 to 200K in early stage companies. But we do that exactly the way that I, as a founder or an entrepreneur, would have liked to be done, sitting on the other side of the table.
So thank you everyone for having me here. I think I probably will bring the two different perspectives here. One, as a founder myself, we've had some unique cases where we've raised money from family offices, and I'm happy to talk about in what context those are. The other part of it is, I think, as Prashant put it, I'm not in the space of creating a family office where there is a wealth management portfolio. Most of my investments are more towards either areas that I understand better or I want to know better and I think will work in the world. So my perspective on angel investments, and if maybe I can call that a not family office, is more around very specific, unique cases which I can be relevant for, and it'll help me. On the other front, I think as a startup founder, and I can give you an anecdote, right? When we launched in 2015, when we first went into Southeast Asia in 2019, to understand the individual regions, right? We were in Philippines, we were in Indonesia, we were in Thailand. The best way to do that was through a family office. We were having a normal fundraising round, and we did a small fundraise from a family office because we felt that somebody doing business in this country is very relevant. They are not funds and all of that, but we wanted to learn the lay of the land on how to do business in that country. And in that context, family office was very, very helpful. And I think in those contexts, I have benefited immensely from family offices. So I definitely think that's an area where even in India, if it grows, will help startup founders, because there will be contexts of whether an industry or a region, etc., that somebody can bring in.
Good afternoon, everyone. I'm a technologist by education experience, and I'm making investments for last 15 years. you call it family office or you call it as a private investment by individual as an institution, how I have seen it's evolved. I mean, initially, when you say investment, it's a real estate or equity or pre-IPO markets. That's how it started. Then organizations started investing into companies which are more strategic to them. To what I have seen is, especially last 5 years, next generation, if somebody is running a large organization, next generation is coming to India. Somebody might have worked for as an investment banker or a private equity, coming and starting a professional family office, which are structured very well. And coming back today, and what I see and what I feel today is the gap between the industry and the technology is merging, right? So every industry is becoming a technology company. Every company has to have a deep understanding of the industry. So I'm seeing that any industry which is growing, for them to be relevant, they have to be closer to this innovation. Just to be closer to the industry, they are investing into companies and they're giving them opportunity to do the pilots. So it's becoming much, much closer between the industry and the startup ecosystem.
So thanks. I thank you everybody for this. So I'll come quickly to my second, question with you guys is that now understanding that there's a different shade sitting in, you have at various times either taken money or invested money as an individual investor, as a family office. What do you think is that this set of investor brings beyond check to the startups that the traditional funds do not? Is there something? Are we competing always? Are we complementing always? Or what is that X we are bringing on table for them? I think that would be nice to hear. How are you seeing things from that angle?
I mean, definitely, while venture capitalists bring lots of value, even family office, or you call it any institution investing into companies, we also bring huge amount of extra benefit. I mean, we are not bounded by 5 years of fund time and has to be exit in 7 years of time. If the company is doing very well and it can continue much longer. Second thing, many times in our example, so we have built a platform to operate large infrastructure. So many times we have many ecosystem partners which can be integrated into the platform and take it to the market. So that way, for go-to-market and giving access to the customers also it would be a huge support for them. And I think one important thing what I feel is many people with a good profile, but who can open the Rolodex. I mean, they are the right investors, I feel.
Also, just to add to what Sridhar has mentioned, family offices are more patient capital, and following on that, it's not like many VCs come with a preconceived notion that this is under this valuation we don't want to enter. Whereas family offices can be a little more flexible, they can deploy their funds, wait a little longer. And another important point is family offices also bring a lot of relationship capital. There's a deep sense of connections within the industry with other partners where we can quickly see whether there's a product market fit or not for that particular startup. So I would say coming from the family office, it's not only that an investor is meeting the founder, it's more like the capital and the connections are meeting the passion and innovation of the founder and then growing together.
Specifically in my case, I think one has been obviously the patient capital, but the other has been the need to have founders on the cap table. One of the things that when we sort of launched VC Mint a few months ago was we said, we bring that founder-led capital to the table. And that seems to resonate with a lot of folks because we've seen over the last 10 years, VC funds come in, analysts sit in all these discussions, but you're wondering, are they bringing anything more than capital? To then have founders sit on the cap table seems to have a lot of latent demand for it, which I think is what some version of family offices do bring as well.
Yeah, I mean, I think similar to what Sridhar, Aditya, and Monish have said, I think one on where can they add value, right? Can they help me hire people, or can they get me to a GTM because of Rolodex is one part of it. And if they are able to do that beyond a VC is definitely the reason to invest. I think the other part of it is, like Aditya said, most VCs are run by operators, and
Right.
fund managers, right? They need to return a certain capital by a certain point of time. What an entrepreneur goes through, most likely, and I'm assuming most family offices are also business families, also understand much better in terms of what's the constraint, what's the speed, etc. So I think the ownership of directly it being their money and knowing how businesses run probably is a value addition beyond an operator just managing somebody else's money.
Got this. So I think I have a question for Aditya. Aditya, family office are fighting now with the startup funds for the same pool of capital. Are we always fighting, or are we complementing? How are you seeing things?
I was speaking to somebody yesterday, and they said there's a lot of these idea stage funds, people that put in 25 lakhs, 50 lakhs. And then you have VC funds that come in at about $1 million. I think we're still sort of as an ecosystem struggling for that piece in between. So if as a family office that is investing in startups, if you're able to position yourself nicely, right, this 100 to 300K kind of band, it actually seems to be totally white space. And what this allows you to do is today, if some company reaches out to me and they're very early, I'm happy to refer them to the idea stage funds, right? Or if they're raising significantly larger capital, then I basically tell them, hey, I'm committing my capital, but then I'll also introduce you to these 3 other VC funds that you can go speak to, right? So in some ways, it's a very cohesive ecosystem, right? And a lot of times VCs share deals, and so it is complementary.
How about you, Manish? What do you think?
I think, speaking personally from our family office standpoint, since my family manages and operates the Delhi public schools here in India, we typically, I think from that founder mentality, we focus a little bit more on the edtech startups itself. So in that particular space, I see a lot of companies which are right now supporting, collaborating each other. Also, a lot of companies are not, they're growing in revenue month over month, but they're not able to hit that specific valuation. And we ourselves have seen that out of the 28 investments we've made, we've taken 5 exits and 2 partial successful exits. But from an edtech standpoint, we're still not seeing that upswing. So typically, I do see that there's still a lot of collaboration between different VCs, between different angel communities, where they can support each other and grow together.
So this is to Rohit and Sridhar. Since you are running your successful businesses and also doing a lot of investments, are the funds in India bringing to you some strategic deals, or are you seeing collaboration there?
Well, definitely. So I'm LP in a couple of funds, as well as we have friends who run venture capitalist firms. If they see a very good company, but they are not VC funding ready, they say that, hey, this company looks good. In 6 months, if they meet the numbers, if they deliver, there is a possibility that we can invest. We get the opportunity to invest. And they have to see in value in us that what Aditya mentioned, you as a founder, whether you can add value to that specific startup. So that way we get many opportunities. And second thing is, when we have done acquisitions, recently we have acquired 2 years back ILFS Technologies. When we did this large acquisition, the fund came to us because they wanted us that we can also operate for them, right? So many strategic ways. There is a funder for founders as well as who are operators, who are investors. There could be a strategic alliance with VCs and PEs.
Yeah, I think it happens a lot, Prashant, like you said, right? I think either when you're an LP in a fund and they're bringing for follow-on funding or co-investing, The other way is like we have about 6 institutional investors investing in Darwin Box. And when they've seen us in operation, these investors, they find that, hey, Rohit could be good at this, Chaitanya could be good at this, Jayant could be good at this. And they bring that individual person and actually make the ask saying, do you want to be a part of this round? And you can help these guys, right? And for whatever extent you have time for. But you've exactly done this, you've solved this problem, you've done this GTM, etc. Why don't you join the cap table? Is something that comes very often from the investors that we have on our board or our cap table who bring deals to us as well.
So Rohit, coming to you, since you mentioned that you have raised a lot of money from the institutional investors and family office, what does Rohit prefer to? If you are redoing the same journey and you have both a pool of capital available, which would be your preferred pool of capital, a fund or a family office, and why?
See, I think, if I had a choice is a very tough word because, I mean, contextually it's very different at different points of time. But definitely, there are times where you need a fund for brand value, right? So, you are a Sequoia funded company or Lightspeed funded company works a lot better in some contexts, right? A phone call from a family office to another founder or their network works very well in some other context, right? Like I said, if you go into a Philippines, it doesn't matter to them whether you are Sequoia or Lightspeed funded. They don't know.
Nice.
Right? Like most of those businesses, which are traditional businesses there, don't understand that. But let's say the JG Summit Holdings, Lance Gokongwe, who was a family office which invested in Darwin Box, when he picks up the phone and calls 2 conglomerate heads, they give me a hearing, right? Like they give us a chance to present. I don't think anything that I could have done with an institutional investor could have got me that, right? Because, I mean, at least that region and in that context, conglomerates are fully run by families which are well connected with each other, etc. So again, it's a context thing. It really was helpful when we launched in Southeast Asia, etc. Right? But if I have to now go into the US and say I'll have to solve with one family office, I don't think there is 1 or 2 family offices that can cover that market for me. And maybe a VC is a better answer.
Got this. So that gets me to the next part, and I would like to understand from each one of you, what is the thesis, what is the investment thesis you currently have, each one of you, in the startup space that you are looking at?
So I'll first start off. For our family, or I can speak for our family office, and we typically do a 20% allocation to startups. About 30% is into VCs, hedge funds. This also constitutes our public market portfolio plus wealth managers. We've allocated about 50% to doing NCLT deals, pre-IPOs, organizing structured debt, etc. So as Sridhar was just mentioning, our focus, or my focus as a second generation entrepreneur, along with my wife who's a part of the family office, is to set up strict processes and governance rules. And we believe that investing is a science. So we basically have 20 different business parameters that we check before doing each opportunity, whether it's a startup or not. And we would like to categorize it as our own investment thesis, which is a 5M principle. The first most important is manpower. And how good are the founders? What are their educational qualifications? How good is their management team? The second is methodology or marketing. So what are their unit economics like? We personally would like companies or startups which are doing at least 2 crores of annual revenue rate. What is their lifetime value? What is their customer acquisition costs? Is the person able to understand are the consumers able to understand what exactly the product or service is, how they market it? The next is market access. Is it a local product or is it a global product? Do they need any licenses to go foreign? Fourth is mentorship. Who are their advisors? Who are their mentors? And are they taking good constructive criticism to grow or take the feedback loop from the family offices? The fifth and the most important thing, as everyone would have guessed, is money. How many fundraising rounds have they already finished? Who are their other investors? Do they have a solid path to profitability, and how will they give us an exit strategy? So this is basically the investment thesis that we are following currently.
For me, the early stage investing is actually quite emotional. Why I say emotional and not financial is because I'm hoping that whatever we said, right, that multi-generational custodian, wealth preservation, and all of that is happening on the 85%. I think the 15% um, is me as a founder having gone through that journey, saying that if there was an investor that really believed in my passion, my vision, will they be able to support me? Right? I'm not saying that it's not financial, this is not charity, right? But at the same time, if I were to put everything in an Excel spreadsheet and take decisions, I think it takes away the X factor of investing in startups. So I've done 40 investments over the last 18 months. We write 2 checks a month, 100 to 200K. Good founder, large TAM, and I get excited by the business that they're running, regardless of what domain it is on. So for me, it's a little bit, Moni said it is science. For me, it's very, very artsy, little bit emotional, having gone through the founder journey.
Right. And for me, I think the stage probably defines it a lot more. I do only early stage, so right, it is probably 80% on the founder and 20% on the TAM category, whatever you might want to call it, or the technology. So predominantly on the founder, who I'm excited about, who I believe can build a large company, is how my decision making is. So I think a combination of execution rigor, ability to articulate, sell is where my space would be, right? And demonstrated parts of that in the past, right? Generally comes through a reference, because either it comes through the funds that have invested in them or some other friends who've done that. So at least comes with a certain level of credibility. So because again, like you called out, right? While running the business, I don't have too much time to do a diligence on a person. So it's starting from a certain level. And beyond that, what I look for, whatever signals are working for me, whether it could be intuition that's working for me on those two abilities, on whether they can execute hard, and second, they can articulate, sell, right, their vision, I think is what I look for.
For me, mostly strategic investments. Wherever I understand the business, where I can help, either with technology or go to market, with whatever if I can support them and if I can help them and fully understand, that's one. Second, of course, if I believe in the founder, as Rohit mentioned, so when somebody comes with an idea from 1,000 feet level to 100 feet level, lots of things will change, positioning and all, the real pain point, what he is solving. If the founder is good, he will figure it out. The third is, if somebody whom I know, whom I trust, if they are investing into it, I just put co-investment and don't really bother much.
So I'll give it back to you, Sridhar, quickly. Since you are talking about strategic investments and coming from the tech space, AI era and the changing landscape of startup. Quick one from you. Rather from everyone, I want to understand, what are you seeing around?
AI is crazy. Maybe $1 trillion worth of investment in last 1 year, and it's only going to grow. You're talking about couple of $1 billion investment every year, and most of the money is going into 7 top players. So in the era of AI, one, as a company, the world is changing so fast. You build an amazing SaaS product, it can become a feature of OpenAI or Gemini, right? How you differentiate, right? I think you have any privileged data, you have a very specific domain experience. Do you have access to the customers? Do you have the channel, right? That's actually, I think, extremely very, very important. And, as an investor, when I wear an investment hat, I always wanted to balance between, how much I wanted to invest in. Even let's say as an investor, I think the days are gone that, certain things and you're going to invest into it, because the world is changing every 3 months, 6 months. Either as in a family office, if you have some knowledge and you're just betting on it, may not work, right? You should know what AI can do today, what it can do disrupt today, and what is going to happen in 6 months where it's going to disrupt, and are you betting on the right company? I think we are going at AI speed. As an investor, you have to go at AI speed if you wanted to bet on the right company.
No, I think it's exciting for sure because to be honest, at some point we were like, oh, this is. I mean, our business has also become just a large business which is growing at a certain point, and you needed something like a AI to say, hey, now can this take you to next level or right throw you down? So definitely super excited about the opportunity that AI is creating. I think what my learnings have been, at least in the last 1 year, have been is be very clear about what you can control and what you can't, right? And I think what ChatGPT's roadmap is, how deep technology is going to be, can I build an LLM, all of that I have no control over, right? And I don't think I have the capability or the control over controlling that. What I can do very well is I understand my customer very well, I understand the problems they're trying to solve, I understand HR as a function because we've been building in this space very deeply. There could be multiple other functions which we understand very deeply. How can I use what's getting built to be relevant for that is where I'm spending a lot more time so that I'm AI aware and trying to use that for whatever is the things that I'm solving for.
In our case, I think I've stayed away from investing in AI companies. What I mean by that is companies that say, hey, my only claim to fame is that I am AI. Right? So that's when you get disrupted. But what I'm also seeing is AI is going to become a little bit like internet. You're never going to say, hey, are you an internet company anymore, right? You don't say that anymore. So you're not going to say, are you an AI company anymore? It really goes back to business fundamentals. What problem are you solving? Who are you solving for? Do you have any unique customer insight? Are you able to effectively leverage AI to make your whatever solution more efficient? So for me, AI is a little bit of a means to an end because I think the foundational pieces, I think it's a much, much larger game.
Agreed with everyone on the panel. Just one thing I wanted to add is from a family office standpoint, when we're actually going into the investment committee and doing the analysis, we've added one additional parameter where we're checking how uniquely is AI impacting this company. Are they leveraging it to the maximum? Whether that is in terms of customer acquisition or in terms of marketing, or are they hiring some specialists to sort of automate some of the repeat tasks? In terms of AI investment, there is one particular company we backed back in March of 2023. It helps grade students' answer sheets in terms of content, intent, subject, and matter. And they can grade AI handwritten tools. So the most important thing that we looked in this company is, are they just a wrapper from any of the available softwares, or are they actually building the proprietary LLM themselves? So when we realized that they are building it and they're bringing the costs down, we made a bet in them, and they've grown massively since that time on.
Got it. So coming to the second part is the number of deals. I just was having a conversation with many family offices, and I understood that everybody like you is operating with a very different theme. So when it comes to founder-led, like you all three are doing here, there is only so much you can contribute as a founder to a particular startup. So is there a limit that this much of companies we will deeply work with, and the balance will be just some meaningful checks? How are you, navigating this space in terms of deal sizes and how you want to work with them?
I'll tell you what I'm seeing in the market. Of course, I'll talk about myself. And I have seen some people who built organizations, exited their businesses, and they have time, and they have lots of experience and relationships. So I have seen that they take 4 to 5 companies, become part of the board, very closely work with them to make it successful. They're very, very focused. Somebody like us, unless it's very strategic, the time is not something which we can really give maybe once a month or on a need basis, just help them.
I think in very similar number, we have 39, 40 companies in the portfolio. With about 5 to 7 of them, I'm on a constant WhatsApp with the founders. Anything and everything, I'm available, sounding board for them. Anything beyond that, I think it gets hard. And it's also not that it's going to be the same 5-7 companies. They may need more of my time today, but maybe 6 months later, they would have passed on and, some other companies. But I think 5 to 7 seems to be at least the workload that I've been able to handle.
So at least for me, I'm very clear with them that I probably won't have a lot of time for them.
Right.
So we agree on an upper cap of what we'll do, right? Which is probably meet for an hour every quarter, if needed. If not, it's fine, right? Send me a message on what's the latest update and how can I help, right? Very WhatsApp centric, this thing. So it's limited to that. So that's why there is no limit on number of companies that I think about, Prashant, but the interaction is very limited.
So managing the family office full-time, just one other point I wanted to add from a different perspective is, though we have time to give, it's more about, does the founder really need help at that point? I think we do a lot of analysis. We meet them multiple times before making the investment. But once you've made an investment into a startup, it's like you're strapped on for the roller coaster, right? And then you just have to enjoy the journey. We don't want to aggressively keep meeting them and trying to push our dominance through, but whenever they need help strategically, and if they are open to taking that feedback at that point, I think that is when the maximum value is added.
So coming to the next one is about, starting with you, Aditya, post-deal expectations. What do you have from founders?
I think it's fairly simple. I think he spoke about it, Rohit spoke about it a little bit. After you do the deal, essentially you're sitting on the same side of the table. So one is, I think, just having a good sense of the business, and that's usually a slightly longish WhatsApp update, or it could be like a one-slider, or it could be a short email, and that's usually good enough. And then just being available for the founders. I think that's really how I look at it.
Got it.
So when we first made an investment, obviously the level of passion of the founder is different. First thing we see is the clarity. Do they have the same conviction? Are they still passionate about the same idea? One thing I think we're a little more particular about is communication metrics. At least one MIS, if that can go out monthly, and to see if there's any strategic support that's required. The last one is just the capability and the character of the founder, right? Do they have their heart in the right places? Do they have good leadership integrity? And are they able to communicate their vision to the rest of the team? And also, at the same time, grow effectively. I think these three things are what we look at after. And if there is a roadblock, are they able to pivot? That is, I think, the most important trait that we look for in a founder.
No, I think, as I said, the only thing I ask of them is being honest, right? Like, again, I am not their biggest check, definitely in the business, right? So it's not going to meaningfully change their life, or like I'm not going to push them or drag them to sell or anything. So what they can use me for is being honest with and honest to, right? Like, and I think that is what expectation I try and set. Obviously, it probably takes some time to build trust, but the most use my investee companies, if I can call them that, found is getting just an honest perspective on the situation they are in, what can they do, etc.
Got it. Anything from you, Sridhar?
I mean, as a founder, if you are a family office, of course, you have a structured way of reporting, but we don't look for it. But doesn't mean that we don't wanted it, right? So either governance, reporting, financial discipline, promoters' commitment, and more than everything, the culture of the organization says everything. If you just visit them and you see how the culture of the organization is together, to passion to build the organization, I think that tells everything.
I think we are very closer to our finish time, and I would like to, so I'll finish it here, and I'll keep it open for any questions by anybody toward these panelists.
I think this notion of, or this perception of family offices being very micromanaging, I think is changing very fast, if I understood your question correctly. Because in a lot of cases now, the new family offices are people that are coming from having run businesses in the new age and not necessarily in a specific family sort of hierarchy structure. So I would like to believe it's changing very fast.
Koya funded company. or this is backed by this family office. Whichever your customers would prefer is what I would go for.
Okay. Just a follow-up question for Aditya. Aditya, what we've traditionally seen is angel funds investing very aggressively, and family offices were not very much inclined towards the startup investments. But yes, because these things have been evolving and people from the family office space are also coming towards the startup investment, you said about 15% of that is now being allocated towards this. So do you see that can family offices also come into the micro level investments? Let's say ticket size lesser than about $1 million. Currently you said 100K to 300K from your office tends naturally goes to the startup space. So can a normal family office also come in this space and invest vis-a-vis the early stage angel funds?
One of the things I've seen a lot of family offices comment on is that if I do 100 to 300K or 200K, I have 40 investments in my portfolio. It's just hard for me to manage, right? So as a result of that, they do larger tickets, come in much later, de-risked, all of that. But that said, if within the family they have the bandwidth to be able to do it, I think you'll see a lot more family offices come in early. And the beauty of that is, like for example, I do the 100 to 200K check, but because I have a larger pool of capital sitting on the other side that is technically needs to be de-risked, I come in later with that pool of capital, right? So that's the advantage that you have with a family office, like where they come in early stage, but they have the ability to follow on as well.
No, I think thank you everybody for such an interesting session. And I believe I did see some of the hands, and because of time we could not. So in case you can catch them after this, please get your questions answered. And thank you so much. It was a really insightful session. Thank you.